So I have some questions for you. Tell me if this has ever happened to you. You've either over-leveraged by a massive amount. You've been paralyzed by previous losses or one big loss. You have doubt or maybe fear about pulling the trigger. You've exited your position too early. Or you felt like you did damage to your psychology from some of the things, mistakes that you made during your trading experience. Or, next question, don't follow your system or trading plan. How many of this happens to you? How many would you say? 1, 2, 3, 4, 5, or 6? Any one of these? Aviator says first 2 points have never happened to you. What about the other 4, Aviator? Okay, yes. Great. So some people said 4, nearly all of these. Fantastic. So you all have experienced these things. That's okay. I have too. Ironically, a broker recently did a study that the one in here that seems to be, well, all of these are common, but one of the things that seems to trip up traders the most is that they take profit too early. They actually did a study of every single pair and traders' profitability. Ironically, traders as a whole, over a 2-year period, were well over 60% profitable. Well over. Depending upon the pair, they were between 57 and some of them up to 68, 69% accurate per pair. But this was the problem. The average profit they were taking per pip was far less than the average loser they were taking per pip, which means that they were either setting their stops too big or they were getting hit with the full stop. When they got hit with the stop, it was the full stop, but when they took profit, it wasn't the full profit, which means they're taking profits too early. So traders are sacrificing accuracy for a improper or a risk management model that won't work, a money management model that will fail. It's bound to fail. Mathematically, it's going to fail. So being accurate is not the main problem. When your psychology's off, being accurate will be. But when your psychology's on, being accurate isn't the problem for most traders. It's taking profit too early. That seems to be the one thing that trips up traders a lot. And we're going to get into some of the reasons why. But if you look at all these questions, if you look at every single one of them, what's the one common denominator between all of that? The common denominator in all those questions is you. It's your mind. And underlying all that is condition responses. It's not the broker. It's not the market maker. It's not the market. It's you. The common denominator is you and your mind. And the underlying framework, which is causing all these things, all of those things from the last thing I talked about, over-leveraging, paralyzed, doubt, fearful to pull the trigger, exiting position too early, felt like you did damage to your psychology, your trading psychology. Don't follow your system or trading plan. Common denominator is you and your mind. And the thing that's operating underneath all of that there, the little mechanics inside the clock, is condition responses. All condition responses. It's ways of thinking. It's condition responses to certain experiences that either have to do with trading or maybe have nothing to do with trading. Nothing. And so you got to remember, condition responses that you have now, they are probably things that you've learned a long time ago, and they may or may not be appropriate now. They may or may not be useful now, but they also, most of the condition responses that you have were really methods that you used to either protect yourself, to feel safe, or to feel like you were going to be loved as a kid or whatever. But they were a method that you employed to not receive harm, basically. It was all to not receive harm, to not lose, to not feel pain. That was the underlying purpose of most of your condition responses. And so if you think about it, it's very possible you have some programs running in your software that may not be helping you become a successful trader. They might be undercutting all your efforts, all your study, all your time watching the market, all your practice of systems, your money, all the trades you make may be being undercut by some of the software programs that you have written in your mind. The good thing is that those can be changed. Like a computer, software can be rewritten. And that's the beauty of it. But the common denominator in all of your problems, in terms of trading, is you. Now, I want to talk about how the mind and memories work, because after that I want to get into some important things. But you see an image of a shoebox with a bunch of pictures here. A lot of times, for the longest time, neuroscientists have tried to compare the mind to a computer. And it has some effectiveness. It's partially an effective analogy because in some ways it's totally true. In some ways, the mind is like a computer. But when it comes to memory, the mind is not even close to like a computer. The way a computer organizes memory is very logical. It's very well thought out. But the way your mind organizes memory is just like this image. It's a shoebox. In your brain, yes, certain memories will get placed in, or certain things and neural connections will be in certain locations in your brain. But for the most part, memory is in many different parts of your brain. Different memories are located in different parts of your brain, and they're not fixed. It's not like your memories of mom are in one location, your memories of dad are in another location, your memories about money are in another location. They're all over. A memory is like a picture or a photograph. And each memory and experience is like a photograph. But the problem is that all of these experiences and memories and thoughts and ideas of your past are like a bunch of photographs that are stuffed in a shoebox in no particular order. So that means your memory, a particular memory you have around money, and that means a neural connection you have around money could be right next to the memory of fear of heights. They could be right next to each other. So, and it's very possible that when you try and access money, you actually have to go through your memory and these neural connections about fear of heights. You actually could have to go through that memory to get to one, to get to the other, to go through one to get to the other. That's how your mind works. Now, with that being said, do you think it's possible that some of your fears or some of your doubts or some of your ideas about wealth, discipline, money, focus, concentration, being successful at trading, do you think some of these neural connections that are in your brain could be next to other neural connections that have nothing to do with that whatsoever? Does that make sense? Does that seem logically possible? Yes, no? Can you all see why that would actually be an issue? Because all of your ideas and programs and software written about money may have actually nothing to do with money. I've actually gone through this personally because I've been doing a specific type of testing for this, where we can actually test if I have a problem with a certain thought or a certain experience, we can actually test and find out what is that. We can isolate that particular experience and then find out what experiences and memories are connected to that, which are actually causing that experience to go off, that fear to go off. And oftentimes, it has nothing to do with what you think it would. One of the things that actually inhibited me in my early days, my very early days, about being a successful trader, because the bottom line is, you're saying everybody here is saying they want to be a successful trader, whether it's you trade full-time, part-time, it doesn't matter. Everybody in here is saying they want to be a successful trader. And every single person in here is also saying, hey, I want to trade and I want to be more wealthy than I am now. In fact, if I had to guess, 70, 80, 90% of you are probably saying, I want to be twice as wealthy, or 3 times as wealthy, or maybe even 10 times as wealthy, or 1,000 times as wealthy, or some people even 1,000,000 times as wealthy. But every single one of you is saying, I want to be a heck of a lot more wealthy than I am now. And that's one of the reasons why I'm trading. I love trading. Some of you just love it because of the art. Some of you love it because of the science. Some of you like it because of a challenge. But there is one underlying motivation that is present for sure in almost every single one of you. And every single one of you is trading because you do recognize it is possible to become more wealthy than you are right now through trading.